Good morning, everyone. Today we're examining the latest U.S. inflation report for July 2025, a key measure that provides insight into the health of our economy and the potential direction of monetary policy. Let's begin with the key economic indicators for July. Our core PCE, personal consumption expenditures, annual rate rose to 2.9%, marking its highest level since February. This figure is crucial as it's the Federal Reserve's preferred inflation gauge. Despite these higher prices, consumer spending showed resilience, increasing by 0.5% on the month, aligning with forecasts and indicating continued economic strength. Personal income also accelerated, rising by 0.4%, completing a report where all figures met consensus expectations. Now let's look closer at the PCE price index and the Fed's target. The core PCE annual rate in July stood at 2.9%, a 0.1 percentage point increase from June, and its highest rate since February. While in line with Dow Jones forecasts, this is still a distance from the Federal Reserve's long-term inflation target of 2%. The Fed primarily uses core inflation because it excludes volatile food and energy costs, offering a clearer picture of underlying trends. On a monthly basis, the core PCE index increased 0.3%, also as expected. The all-items PCE index showed an annual rate of 2.6% and a monthly gain of 0.2%, also hitting the consensus outlook. Turning to economic commentary and market reaction, the implications are significant. Ellen Zentner, chief economic strategist at Morgan Stanley Wealth Management, noted the Fed opened the door to rate cuts. But the size of that opening is going to depend on whether labor market weakness continues to look like a bigger risk than rising inflation. Today's inline PCE price index will keep the focus on the jobs market. For now, the odds still favor a September cut. This sentiment suggests that while inflation edged higher, the Fed's focus might now lean more towards labor market data. Following the report's release, stock market futures remained negative and Treasury yields held their gains, indicating a mixed market response. Finally, let's break down annual price changes by category. Inflation numbers were somewhat moderated by a 2.7% annual decline in prices for energy goods and services. Food prices, however, rose 1.9% from a year ago. The balance was heavily tilted towards services prices, which jumped 3.6%, in contrast to just a 0.5% increase in goods prices. On a monthly basis, energy was down 1.1% and food declined 0.1%, while services prices rose 0.3%, essentially accounting for all the monthly